Welcome back to the channel. I'm Crypto Trend Trader, and today we're going to be looking at the TJD Parabolic SAR with binary pivots and moving averages. And I know that sounds complicated, but it's basically a combination of multiple indicators that's essentially going to identify key support and resistance levels and allow you to make trending trades. So first off, I'm going to show you exactly the indicator itself. You will see you can search TJD or Turbo J Diesel on TradingView, but it's TJD underscore PSAR underscore BPIVOTS. Alright, and we're going to do a little breakdown of it here. So what I'm going to do is I'm going to first go into settings. And actually, before we get started, I'd like to remind you, this is not financial advice. It's not trading advice. I'm not your financial advisor. These markets are extremely volatile. So please trade and invest at your own risk. Only invest what you're willing to lose. So this will work on any market. We're looking at right now Bitstamp, Bitcoin on the weekly, and I'm going to go ahead and we're just going to start with the SAR, and I'm going to give you a breakdown of each portion of this indicator, because what it is essentially multiple indicators combined into one, and that's going to give you essentially key pivot points on the market as well as resistance, support, and trends. So you'll see how this is basically working is it's very clear. We're looking at Bitcoin on the weekly. When you're in a strong uptrend, it starts giving you these green dots, and what those green dots are is they're the support as the price continues up. And you'll see that the further we get away from it, the more likely we are to come back and test it. And then when we do test it, it's going to typically act as support until it doesn't. And once you break through the support line, immediately after that break, it's going to flash a red on top here, or if you were in a red, it'll flash a green on top here. And what that's doing is essentially saying the trend is changing. Now the longer time frame you're on, the more accurate this is going to be. So you see we're on the weekly, so the trends are going to last a lot longer. I didn't actually do the math on it, but your average trend here is, I mean, probably 10 to 20 weeks on average. You'll occasionally get a short one like this, but again, that's gonna, if you're in an uptrend, you're gonna get shorter downtrends. That's your correction, and they're less reliable. If you're in a downtrend, you're gonna get shorter uptrends, and they're less reliable. So what you're essentially gonna do is you're gonna stay in the trade based on what the parabolic SAR is telling you. And you'll see when you're in an area like this specifically, regardless of your own bias or what you think is going to happen from other technical analysis, you'll see this is one of those areas where it's not definitive as to which direction we're going. Because we clearly have been in an uptrend, but now we're flashing enough reds that we're now in a downtrend on a weekly basis, and it's more than your typical just quick little flash. Okay, you can still have an uptrend and get that many in a row, but until we break through this top point here, essentially the SAR is not going to tell you, the trend has changed until we bounce up that high. So by 13,351 from 9,600, you ought to know by then if we're going to go back in an uptrend or if we're going to be testing that region. There's a lot of other things that are going to identify it. So that's the parabolic SAR, and that's basically how it can show you trending moves. And essentially, if you can get on the right side of a trend, you can ride these things for weeks, months, even years. Alright, so now we're going to switch back over, and what I'm going to do is I'm going to turn off the uptrending and the support and resistance SAR, and then now we're going to turn on the binary pivots, and we'll go back and check those out. And now what these are doing is they essentially identify key pivot points on the market, and they essentially are identifying the support that we build, and then when you break through that support that essentially you've seen a change in the market. So what we had here, we had a strong trending move up, and you'll see these are slowly rising, and as long as they're rising like that and they're in an upward slope, you can say we're in an upward slope. And you'll see what happens is we'll put in a burst up, and then we'll put in a resistance point, and then we'll break through that and put in a resistance point, and all that is just the price stepping up, and we're putting in a new resistance area. But every time we break through that resistance area, we then go to a new high and then come back often and retest where that was at as support. But you'll see the actual support itself is building the whole way up, and we're so far away from it. You can tell we're in a very powerful, strong trending move up. But as it starts coming down here, and again, this is going to be more accurate on longer time frames, but it's less useful for entering and exiting trades because you're going to get a lot less signals based on it. But here we built a very strong support, so we knew as soon as we broke through that support right here and we were stepping down, we know we're in a downtrend because the resistance is stepping down. Meanwhile, the support is staying the same. So we knew as soon as we broke through this support right here, that was a change in trend, and we're essentially going to lower prices. So you knew if you weren't in a short already, you knew to enter one. And then again, you'll see the opposite here. We put in this extremely strong support here, and as we were diverging from the support itself, we were essentially stepping up to these resistance points. We found resistance here, and then as soon as we broke through that, we've just been stepping up to higher and higher prices as we went. And now you'll see what's happening here. We put in that flat line resistance again, and typically you're going to see those, and what's going to happen, either we're going to get a powerful move back up to new highs, or we're going to make it to that and reverse price, or we're already going to start diverging away from that. So essentially, this one is basically just giving you basic support and resistance on the market, so you can have an idea. Obviously, used together, they're much more powerful. So now I'm going to turn off the support and resistance, and I'm going to go ahead and put on our EMAs. And on this indicator specifically, I have a couple moving averages. I have the 10 in red, the 21 in white, the 50, the 89, the 200, and then we have the SMA. All the rest are exponential. This is the SMA 200. And then I actually have right now on here the white moving average as well, but I typically use that for some different things. I actually use that moving average to display moving average from a different time frame, but that's irrelevant. You can change it to whatever you want. These are the moving averages that work. So you'll see essentially what happens is the 200 moving averages are support. They usually lift the price up to new highs. We come back down here and we find ourselves bouncing around in the 200 moving averages, and then again come up. Essentially what you're looking for with the moving averages is you're looking for the smaller time frame moving averages to be above the next time frame, to be above the next time frame. So you want it to go from 10, 21, 50, 89, 200, 200. And that means you're in a strong uptrend when all of them are flayed out in that specific order. As you start getting choppy and they start crossing over, a strong indicator on the weekly is once you break through the 10 moving average and you start getting closes below it. You see as soon as we close below here, we had that massive dump, and then you'll see when we actually dump, we find support on these other key moving averages. So when you're above the moving average, you want to look for it as support. When you close below it on a significant time frame, you want to look to your next moving average for support. And then what will often happen is, typically once we break through a support that's been running up this whole time, we will test the next support in line, and then if we close below that, you'll see we close here, we immediately come back up and we test the failed support, the 10 that we were using as support. We now are going to test that as resistance. When we find resistance, we're going to dump back down, and because we already tested support on the 21 to come back up, now we're going to break through that, and then we're going to consolidate, and then we're going to break down to the 50, and then once we find support on the 50, not to mention this reversal candle, we're then going to come back up and make another attempt. But you'll see this happens over and over again, and essentially as one fails, you then go down and test the next one, and sometimes you shoot right through that one and come back up. Other times you'll find the next one and come back up. But these are very common to be used in crypto, especially the exponentials, but a lot of people use simples because of traditional markets. But essentially just look for whatever works, and you'll see based on what's happening now is we're essentially getting a potential change in trend. From the bottom here, once we broke above and close above the 10 moving average, we haven't fallen below it since. We came down and tested it a couple times and we got a strong reaction off of it, but each time the reaction was weaker. So here you see we got a weaker reaction, and now we got almost no reaction, and now what's going to happen is we close right at it on this last weekly. When the weekly closes tonight, if we close below this, that's going to be a change in trend. So what's likely to happen is, now we did it once here and we got a powerful move right up, but it was evident immediately. What's likely to happen now, because we already did that once, is we're likely to come down and test the 21 on the weekly, which is about $9,000. Now before that happens, oftentimes what we'll do is we'll come back up and we'll test the 10 as resistance. So we could come all the way back up to like 10,000 and then fail back down to the 21. But that's essentially how the moving averages work. And then I just want to talk about something in particular. You hear people talking about death crosses and golden crosses regularly, and it's important you understand what that term means and the purpose of it. Now you have basically the death cross is essentially the 50 moving average, the green moving average, crossing below the 200 moving average, and the golden cross is the 50 moving average crossing above the 200 moving average. So what you're looking for is, and I'm going to go ahead and put an arrow in here. So what you have is you have your 50, I'm going to go way back over here. You have your 50 coming down. Matter of fact, I have to switch to the daily to actually show this off. But you'll see once that 50 moving average comes down here and the green crosses below the 200s, we make one last attempt to try to save the death cross, but that's considered the death cross right here. And then you'll see after we fail to get back above the moving average and we fail to get them back in order, we continue to sell off. And that's huge. Once we can't get back above it again, we eventually dump down. And then that's an extremely long-term trade. These do not happen often, even on the daily. And then you'll see here, when we got the 50 crossing above the 200, it had already crossed the 200, but when it crossed the second 200, usually what will happen is you'll get a test down to it, but the market was so bullish at that point in time, we didn't even get a strong test, and then we were immediately picked up by the 21 moving average and off to the races. That was it. So we've been in the golden cross this whole time, and now you'll see we're just now starting to lose some of these moving averages. So what's potentially going to happen here, if we continue to sell off down to this 200 like I'm expecting after our retest, what's going to happen is this 50 is going to get dragged down much faster than the 200s move. So as they kind of level out and lose their slope, the 50 is going to gain a stronger negative slope based on wherever the price is at, and eventually we will get that death cross if price does not continue to move to the upside, and we can't save that from happening. I'm going to go back to the weekly here for a moment, and I'm going to switch back over to the settings here. And again, I'm going to go ahead and turn off these moving averages just to make it a little more clear. And now what we're going to do is we're going to turn on our Bollinger Bands. And this is the final portion of the indicator. And what these Bollinger Bands do is they essentially give us like a standard deviation of potentially where the price can go. And you'll see obviously as we're up at the top of the Bollinger Band, as we're in the top area or testing the top region of the Bollinger Band, it will obviously continue to move up with price at a stronger period. But as you're on the top and you're in a strong trending move, you typically will continue moving to the top in that strong trending move. And again, when you go to the bottom and you're in the bottom of the Bollinger Band, you will continue to move in a strong trending move to the downside. And that's what we tend to do with the Bollinger Bands. So what they help to do is, you'll notice a similar signature here. We were moving up, we were staying at the top, and then when we kind of topped out and we put in that red candle, we got a massive sell-off. But then we were able to continue the uptrend because there was more buyers than sellers. So again, when we sold down here and we came all the way down to the bottom, and then we got a violent green candle, we were able to slowly consolidate and then move up back to the top of the Bollinger Band. And now you see what's happening here is we're at the top of the Bollinger Band again. We tried to break through up here, couldn't do it, we sold off, and now here we're moving back, consolidating. And what's likely to happen here is, because of how this move looks, what's likely to happen here is we're likely to move back down towards the bottom of the Bollinger Band, which is also going to come into confluence with a lot of the support that we developed back in the old bear run before our capitulation dump. So that's the Bollinger Bands, and essentially how to use those. And now finally we're just going to pull all of them up together and we're going to give you the full picture. And again, you may find that some of these are not as useful as others, or you don't like how they look on the chart, etc., and that's fine. It just gives you the ability to have essentially multiple things in one, and then you can look for patterns based on these multiple different things to give you an idea where you're likely to get a reversal, where you're likely to gain support, and where you're likely to find resistance. So by using all these together, we're able to combine them, and then we're able to find levels of confluence that can give us better trade entries and exits.